Guys, let me just quickly show us how we can actually enter a signal. Thank God, this signal just dropped right now. Okay, so I'm just going to use it. This a signal that tells you to long Bitcoin at this particular price levels. Okay, so let me go straight to BTC. Let me go to CoinW, BTC. Okay, so this is BTC. The chart is still loading. Okay, so the entry for this signal is 16700 and 16850. Now, our advice, whenever we are entering a long position, always try to see if you can catch this first entry, because if you enter at this first entry, at the second entry you are already in profit. So even if market wants to reverse, you can take your profit. Okay, so it says this is 750 to 850, almost you see it has entered it has almost hit 850 already. Okay, so basically what the indicator I love using the most is the Bollinger Band. So let me take out all these moving average. So this is Bollinger Band. Let me make it visible so you can see it. Make it visible so that we can see it. Okay, so basically this Bollinger Band, we have the upper bound. Look at the upper bound, we have the lower bound. Now what it means is that this upper bound symbolizes a place of resistance. This resistance means that buyers are pushing this market up, but sellers want to leverage on that, but sellers don't want that price to exceed that point. So it's usually a swing point. I don't know if you get that. It's usually a swing point. You can see at this level now, sellers are pushing the market. Let me get it too. Sellers are pushing the market down to this side, but at this point, buyers are insisting that the market will not go beyond this particular point. So you can see even the signal has already entered at 5-6. Okay, but this is a 15 minutes time frame. If I meet this signal at this point, this is already 16850. Okay, and here's the take profit. Take profit is 16950. If I enter at this point, I might not make so much profit, and depending on my leverage, I might not even hit my take profit, because you can see, look at this part now, this place where we are seeing this, where the signal take profit is 950. This is where the signal take profit is. Okay, this is where the signal take profit is. Looking at it in 15 minutes, it has already exceeded the higher bound. That means it will enter back into the bound. You understand? Sometimes you can see it can go massive when the volatility is high, but it will always enter inside the bank. So what I do, because it's a scalping trade, I would, before now you are supposed to do, you know let's say that's a more technical one. But we can see that the overall market now is bullish. This is a 4 hours candle. Okay, the overall market is bullish, but it has met a resistance even at that 850. Now 850 is also a resistant level. So most likely why this signal is coming is because once it breaks this point, you can see this is a swing point going back up, this is a swing point, this is a swing point, this is also a swing point. So once it breaks through this 850, it's most likely will get to 950 or even 900. Understand? Okay, most likely get to 900. So what I will do is that I've seen 15 minutes. Okay, I've seen 15 minutes. I would go to 5 minutes or 1 minute. Why am I going to 5 minutes or 1 minute? Because sometimes 5 minutes and 1 minute can hold this candle or going upwards. Okay, so if I meet this signal like this, I will not enter this trade. Why? Because this place is a support level. I would wait. See, look at if you bought at 750, look at 750 here. This support level now is 750. Had it been I bought at 750 here, I've taken my profit. That's why I'm talking about perfect entry and perfect exit. Left to me now, once I enter here, I've taken my profit here and maybe waiting for it to retest this middle line, because this middle line is more like an average. You understand? Maybe it retest here, I will follow the trade again, maybe to the take profit. You understand? So this is how you enter and exit the market. So if I go to 1 minute, for example, if I go to 1 minute, you see in 1 minute it's not outside the bank. I would wait for it to at least come down, even if it's at 820. Look at where it went as high as 860, came down to 850. So it might not even get to 850. But because that place is a resistant level, remember this place now is a resistant level, there must be a resistance. You can see that from here it was resisted to this point, it's still going back up. So this has already even tested. So if you want to enter this signal, it's either for you to wait for you to get to this middle line in even let me look at 5 minutes. 5 minutes at 800, or you see another swing point here, can wait at 820, just like we saw in 1 minute. But if it breaks this point now, it's telling you that it's most likely going to get to 950 or 920. Okay, but if I meet this signal here, I will not enter it. I will wait for a better entry point at maybe 820. You understand? I'll wait for a better entry point at 820. Because if you enter at this point, because here's a resistance level, market might start going down. You understand? You see, it has broken and tested. It has broken here and tested it. So I can now decide, because this is an scenario now I'm playing. It has broken the resistance level and it has retested it, but it's still almost close to that bound level in 1 minute. That means it might most likely reverse a little. So let me just say I will enter at 850. I'll enter at 850. 850 is even much for me. Well, let's just 850, because market will always reverse. Can just use 25%, or use less than. I advise you use 10 to 20% per trade. Okay, so let me even watch the market and see what plays out. You see, it has started retracing. Look at that point we talked about. This is 840, this is 820. Okay, very very important. Maybe after this I'll just do a little explanation on support and resistance levels. So it has come to this one now. Want to bounce back from here, but I feel it will still come down a little. So this place is what? This is 49. Let it still come down. It is still, remember that you are trading alongside the trend because the trend is uptrend. We saw that in 4 hours. You know, market has already started gaining bullish momentum. You can see that in 4 hours. You can see the support, the resistance level here, and it's coming down. Okay, I don't want this video to be so long, so let's go back to 1 minute. Let me enter at 4.4 and wait for it there. You know, you will not be angry that, you know, you will not be angry that market did not. Sometimes it might not even later hit your 4.4. It might just keep on going up. Okay, but you don't FOMO into the market. You don't FOMO into the market because you want to enter the trade. There will always be trading opportunity. Your capital is very very important. But you see, the best position, you know, it has already touched this place. Let's look at this market again. Let me see it clearly. So I'm even looking at okay, it needs to come in and go sideways a little, you know. See, it went out here, it came in, went sideways, you know, before changing direction. Let's see if it will hit my order. I think it has almost hit my order. It's already at 4.4. I think my order has been taken. You see, my order has been taken. This is 1 minute. But somebody who is patient can just come here and wait. If you come here and wait, you'll be in a better position. But sometimes price may still not get to this point and it will continue going up. Because what I'm using, you can see that this middle line at 1 minute held this price not to go below. This one will most likely hold it not to go below. Let's see whether there are instances in this market here already. So you can see scenario whereby price is being held by 1 minute. Okay, this is not a perfect scenario. I'm already in profit. But you see that if I enter, even I entered that time, I saw it. You know, when we came, it was around 450 something. Had it been I entered that time, we saw it, I would still be trying to recover from small loss. So the loss will not be much, but I would still be trying to recover from loss. You understand? But most likely, you see, this is what time frame? This is 5 minutes time frame. You know, this market would in fact most likely come here. Most likely come here. So that's how you check for entry. You go to smaller time frame and check for entry. If you've missed the signal, you've missed it. Just wait for another signal. Understand? If you miss the signal, you've missed it. That's why I say this is very important. If you can get it from that first entry point, you will be at a better advantage. Okay, you'll be at a better advantage. But the reason why personally I'm not afraid of this signal is because the overall trend is bullish, except when you are trading against the trend. Understand? Except when you are trading against the trend, because Bitcoin is showing a recovery level. You see, it was ranging at this point, then it broke downwards. These two green candle, this is 4 hours. What's time? These two. So if by 4 this candle get to the middle of this previous red candle here, we know that there is possibility for higher high, for the market to increase in price. These two green candle, but if it doesn't get up to half of this long red candle, then we know that this market might just, this resistant level that it is right now, it would start going downward. Understand? To start going downward from this point. No. But what we are anticipating is a breakout. If it breaks from here, definitely we are going to definitely see our take profit at this point. This take profit is because market is swinging. If it's long-term traders, at this point, based on this candle, we might most likely be seeing this point. Okay, might most likely be seeing this point, because once it's bullish, it's supposed to cover this previous candle completely. Okay, so let me go and give us the explanation I said. I just want to take us on price action and so on. Okay, so let me just do a quick one. This is our course on technical analysis for our traders community. So just part of it, support and resistance. Now, support and resistance level, you see, I've done a mistake now. That mistake is that I did not put take profit and stop loss, because I might come back in this market and discover that market has gone against me and I'm in serious loss. You understand? I might be in serious loss. So let's so this one is volume. Let me close it first. Let's just use price action. So let me just go straight to 5 minutes, because definitely based on your capital, you don't go and start using analysis of a longer time frame. If you use analysis of a longer time frame to check your take profit and stop loss, it will hit your stop loss. So left to me, I can go with this 16820. Can go with 16820 here at this point, because this is a likely place for a bounce. This is a likely place of a bounce in case market comes, breaks this point where I place my entry. This is the next likely point to test and go back up. But if it breaks this point, therefore means that it will most likely touch this red line, or it will come to this other line at this point. Okay, so I'll just put my take profit, my stop loss here. Put my stop loss at 16818 and put my take profit 16919, 818 and 919. So let me go and put my take profit and stop loss. Okay, this laptop view, let me go and find it here now. I think this should be let me, it's like I'll just set this thing with my phone so it will reflect. Okay, let me see. Okay, this is take profit and stop loss. So I'll come to stop loss. This is 16. Yes, am I correct? 16,919. I'll be at a profit of 8%. Then 16,818. I'll be at a loss of 3%. You see, it's not even up to 10% that I said. But if I want to extend this thing to make sure that, because I know the market is going up, I know the market is going to go up, and you see currently I'm at minus 29%. So I can just, personally, I will just go with 0 at -4 and profit of 8%, and click on confirm. Okay, so this is let's go to this. So support and resistance are proven areas where buyers and sellers have equal strength. You understand? They are major turning points in the market. So support and resistance are levels formed when price reverses and changes direction as a result of an opposition. Okay, and price will all often respect these support and resistance levels. Now, in simple terms, they are price levels where buyers would not want sellers to push the market lower. That's when the market is going down. Buyers don't want sellers to push the market down. Then they start buying. That's when they come to equal strength. That's when the market can no longer go lower. We call that place support. And where sellers would not allow buyers to push the market higher. Sorry, this is supposed to be higher. Okay, now they tend to curtail price movement until the market price break through them. Okay, an instance is this point. Let me give us an example. An instance is where are we? An instance is this point. Let me go to 1 day. This is 4 hours. So you can see this is a swing point. You can see this a swing point from this point. Let me use draw. You can see there is a swing point here. The color is the color. Let me delete this. Now you can see here there is a swing point. You can see here too is a swing point. They are almost on the same level. Here too is a swing point. Okay, so these are this place as well. So these are swing points, for example. So these sellers are pushing the market, but when it gets to this point, buyers will push the market back up. When it gets to this point, buyers will push the market back up. Can also see where sellers too are also resisting, but sellers are pushing the market, buyers will push it back up until it breaks down. Okay, until it breaks. So that's definitely what support and resistance levels are, and they are points where you take your profit. Let me go back to that chart again. There are points where you take your profit. So if you short the market from here, you most likely be waiting for the next resistance level, support level, to take your profit. At least you set your profit there, or once the price is approaching there, you adjust your stop loss just in case it hits that point and reverses. Just in case it hits that point and reverses. Okay. I'll make this bold again. Now, in trending markets, support and resistance are formed from swing points. By drawing support and resistance levels in an upward market, we can predict the next impulsive move that will take place. Note the current price is usually between support and resistance level. Every price in the market, there must be up, resistance level, down, support level. So this is an example. This is a live chart of Bitcoin. This is a live chart of Bitcoin around some months ago. So you can see swing points. This market, let's say from here, the market start going up. This is a swing point. Okay? So once it breaks that swing point, it will get a new high, come back to retest it. Come back to retest it. So that's how you trade, that's how you, this is a trending market now. This is an uptrend. This is how you trade trending market. So if, for example, market is going up now, just like the signal that was dropped, market is going up in shorter time frame, and maybe they dropped a signal, or maybe the signal, let's say they drop a signal at this level here, and the take profit is supposed to be, this is the previous high, so the take profit is supposed to be here. Okay, or let's even give it this next resistance level. Then the take profit is here, entry point is here, take profit is here. So they give a signal, you made this signal at this point. There is no point entering this trade, because if you enter this trade, it will hit this place and reverse, and it will come here before it will come here and give you minus. And who knows your leverage? Who knows your account size? So you might even liquidate you or hit your stop loss. If you hit your stop loss, you have already saved the loss before it starts going back up. So in upward trend, we have higher high, it comes back with test, breaks the former resistance level, comes back with test, breaks the former resistance level, come back and test, break the resistance level, come back and test, break the resistance level, come back and test. That's what happens in an uptrend. Okay, in an uptrend, the previous swing point acts as the support level, while the swing point ahead acts as the resistance level. So this is the same thing in a downtrend, support and resistance. Okay, look at where the market is. They gave a signal from here, and you made the signal here, and you want to join. No, you wait for bounce, retest. Let's go back to that signal. You see what I was telling us, that the best point to enter that market was down. Okay, you see I'm in 2% already. The best point to enter that market was down. Let's go back to let's look at 1 minute. Let's look at 1 minute. You see, it has broken. It has broken that place. You see where it came down to? It came down to 6,830.31. That was what I was saying. Look at where I entered though. This is where I entered. 4.4. Okay, I entered at 4.4. This should be around here. I entered at 4.4. But somebody would have just patiently wait for this point. That's why I say if you are entering the market at the bottom, at the extreme of the band, either at the upward band or the bottom bound. At the bottom bound, you are longing the market. At the top bound, you are shorting the market. You can see somebody now that short the market from here. He has made profit. That person has made profit. Now you can see this thing has broken this support level and is testing it. It's testing it. The next thing is going to be another spike. It will just come like a spike. So for me not to take, I don't like taking risks, so I can just go ahead and adjust my stop loss. Sometimes I just wait for 5%. At my 20x leverage, my transaction fee should be around 3%. Should be around 3%. So once this thing is around 5%, I will just adjust my take profit, my stop loss. Especially when I'm watching it closely. I just have to make sure that even if market starts reversing, I will still be in profit. So this is that for resistance level in downtrend. Then okay, this is just about trend. Okay, I don't know, let me just just like we talked about support and resistance in trend line. So trend line is is a trending market. When you talk about trend line, you're talking about a trending market. When a market is trending, it means that it's either going up or it's going down. So we have an upward trend, we have a downward trend. So to draw a quality trend line, you need to find at least 2 minimum swing points and simply connect them together. The point must be very clear. Don't try to force a trend line. Don't use smaller time frame to draw trend lines. Use 4 hours and 1 day time frame to draw obvious trend lines. Okay, so this is an example. This is Bitcoin chart, and Bitcoin has broken this. It tested here, came down and broke it. Okay, so this resistance level, it tells me that Bitcoin must respect this trend line. It's a downward trend. It must respect this trend line. You can see what we talk about support and resistance. This Bitcoin just pumped, came to this resistance level and came down, because many people have placed short orders, shorting the market. They have short limit orders at this point. You can see what we are talking about, support and resistance. It touched this place, went up, broke it. Touched this place, went up, broke it. Okay, this is an upward trend. You can see just with these two first points, you can know that once it touches this place, it will go down. Once it touches this place, it will go down. That's it. Okay, we are gonna stop here. So let's look at our trade. What's going on? You can see this point is acting, is the resistance level here is the market is still just ranging. Okay, so that's basically how to enter and exit the market. You can see that had I entered when we met the market, I would still be seeing loss. Even at this moment, I will still be in loss. Okay, so it's very important we know how to enter and exit, how to enter and exit the market. Very important. So I'm going to end this video here. If you have any more questions, just drop it in the group. We are going to explain that to you.